Peace. How can you not start with that to start the North American session? Here, the hostages have been released, and there's hope for a new dawn of peace in the Middle East. The hope is there. We'll see if that can continue, and we do have continued peace within that region. Also, in trading here today, we do have a half holiday in the U.S. in that the bond market will be closed due to the Columbus Day holiday. The U.S. stock market is open, and it is higher after Friday's sharp decline, which saw the Nasdaq move down over 800 points, and Nasdaq moved down, or the S&P moved down over 2% on the day. So we are getting a rebound. A part of that decline, the euro versus U.S. dollar, the dollar versus yen, and sterling versus U.S. dollar all show a stronger dollar. I'll go to the technicals that are driving those three currency pairs in this video. So let's get started. Looking at the euro versus U.S. dollar on the hourly chart, we did see a rise in the euro versus U.S. dollar on Friday that took the price right up to the 100-hour moving average before rotating back to the downside. In trading here today, we did see a move to the upside that got above that 100-hour moving average, but we did fall short of this other blue line. This other blue line represents the 100-day moving average. And ultimately, if the buyers are going to take more control, they need to get above not only the 100-hour moving average, but the 100-day moving average. The subsequent move to the downside that could have led to the U.S. dollar getting stronger here today against this currency. Saw the pair move below this swing area here. This swing area is defined by the 1.1570 up to 1.15959, let's call it 96. Also within that is a 61.8% retracement, another move up from the August 1 low to the high price that we saw in the month of September. That area was defined by a number of different swing highs coming through here, forming this ceiling. Then it became a floor through here. We went below that floor, couldn't get very far, and then rotated to the upside. We didn't return to that level until last week, where the price came down to the high of that swing area, then broke through it and tried to use that level as resistance on Friday before breaking to the upside and closing above that level. You can see that the early Asian session found support against 61, moved up, and then fell below this level. And so we are below that swing area now, and that's going to be our close risk level for traders here today. As long as the price can remain below the 1.1596 level, the bias remains more to the or in control of the sellers, firm control of the sellers. It would take a move above the 100-hour moving average to take back some of that control, and then above the 100-day moving average to take back even more control. But right now, the sellers are more in control. On the downside, we have this next target coming against this swing area through here, first defined by lows right through here, and then other swing levels through here before moving to the upside. That area comes between 1.1548, 1.1561, and below that, we have another just a minor swing area down through here, which again was defined by different swing levels through here before breaking to the downside, falling to our low, coming back, spiking back above that level and trying to hold support against the low of those areas through here and here before moving to the upside. So this level is also, or this area is another key target on the downside in trading here today. Let's take a look at the dollar versus yen next. And if we look at this currency pair, we did break sharply to the downside in trading yesterday, getting through some technical targets that needed to get through in order to prove the sellers could take back more control. More specifically, we fell below this low right here. We also fell below the 100-hour moving average to the same level. That opened the door for further selling into the close. And trading here today, we saw the rebound back to the upside that got the price back above the 100-hour moving average. Not once, but twice, but each time the price moved above those levels, the price failed fairly quickly and rotated back to the downside. We are now back below that 100-hour moving average, which remains a key barometer for traders. If the price can get and stay above that level, then the buyers are more in control. Admittedly, we did move above it. We should have gone higher, but we didn't, and that's what happens in trading. So you buy the break, and then you get out when it doesn't break. And take your lumps, but at least for traders in the market. But if the price can remain and stay below this level right here and stay below the 100-hour moving average, bias remains more to the downside for at least, let's just say they're in play, okay? I can't necessarily say that the sellers are in firm control. Why? Because we did this to the upside over the last few weeks, breaking to the highest level, going back to, this point right here, which was in February of 2025, we also came up to a key resistance area here on the daily chart near the 61.8% retracement. So it's not like the sellers are in firm control. They're just in play below the 100-hour moving average, below the 152.11. Keep that in mind. On the downside, the price would ultimately need to get below the 38.2% retracement of this trend move, the last trend move to the upside at 150.71 to show that the sellers mean more control. They also need to get below the rising 200-hour moving average to prove that point. Finally, let's take a look at the sterling versus US dollar. And this currency pair rose after testing a swing low, the last swing low going back in time to this point right here at 132.59 on Friday's trade. That was good enough to start the rally to the upside from a technical perspective, or at least give the traders a cause for pause down here. We saw the sharp rally to the upside, take the price back up through this swing area right through here, which is going to be a key level in trading here today and to start the trading week. As you can see, we fell back below it right through here, but could not sustain that momentum. This swing area comes between 1.3323 and 1.3341. Currently trading at 1.3331, so in between those levels right through here. If the price can, we've got a battle. We tried to go to the upside, we failed. We tried to go to the downside, we failed. We'll watch this level right through here to see what bias we're going to get in trading in the short term. If we do go higher, we do ultimately need to get it back above the 100-hour moving average, back above the 61.8% retracement of this move to the upside. Both of those levels are the same 1.3364 level, so keep that in mind. But if the price were to instead move back below the 1.3323, my favorite play would be to the downside for this currency pair from a technical perspective. So there you are. Look at three of the major currency pairs. Peace. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.